Legendary investor and author of multiple books on financial markets and investing, Jim Rogers is my guest on GoldCore TV in this video, where we discuss the next great bear market, the decline of China, and Jim's top investments for weathering the storm that's coming. And remember, if you want to see more interviews with industry experts and thought leaders in financial markets, subscribe to GoldCore TV and hit the notification bell now. And if you want to learn more about how to buy, sell, and store physical gold and silver, log on to goldcore.com, your precious metals experts. Jim Rogers, welcome back to GoldCore TV.
I'm delighted to be here, Dave. It's Singapore here, so it's going into the evening here.
Super. Well, it's early morning in Ireland here. Now, you've warned recently that the next bear market that we go into is going to be the worst bear market of your lifetime. As somebody who's successfully invested through bull markets and bear markets more than most, what is it that gives you such concern? And then a follow-up question is, do you think we're close to that tipping point and heading into the next bear market?
Well, in 2008, 2009, we had a big bear market because of too much debt, Dave. Now, Washington says we're not going to have any more bear markets, so you don't have to worry about it anymore. So if you believe Ivy League educated government employees, don't listen to me, because Janet Yellen, who's the Secretary of the Treasury, says no more bear markets. I've been around longer, a long time, and I have read about what's happened in history, and we've always had bear markets, and we always will have them, and the debt is staggering times more than it was in 2008, 2009. So the next bear market has to be the worst in my lifetime. I'm not trying to scare people. I'm just making a simple statement of fact, like saying the next time we have a hurricane, it's going to be bad. Well, the next time we have a bear market, it's going to be horrific because there's so much debt. When is it going to be? I don't know. Watch GoldCore TV. They'll tell you.
And is there anything that have the Federal Reserve of Washington, have they taken their eye off the ball? Is there anything that they can do at this stage? If they stop money printing at this stage, which is highly unlikely, can they avert the next significant bear market?
Well, all of those guys are bureaucrats who work for the government, or academics who work for the government. They can't get a real job, so they get a government job. We've only had a few central bankers in my lifetime, or that I've read about in history, that had a clue what was going on. India had one not long ago. We had one guy named Volcker a while back, but there have been very few who ever understood what they're doing, including this crowd. They don't know what they're doing. You ask a very interesting question. They have two choices: continue printing money, which they might well do, or stop. Well, if they stop and they raise interest rates and cut back, then the bear market will start sooner rather than later, even despite what they say. If they continue to print money, yes, inflation will continue to get worse and worse and worse, but that too will eventually lead to a bear market because interest rates will go through the roof with inflation.
They've painted themselves into a corner and they've become beholden to the stock market. And they're talking now about raising interest rates. So there's a good chance, do you believe, that that might foreshorten the time between now and the next bear market?
Well, they'll raise interest rates at least a time or two, and it'll certainly scare the markets. Traditionally, and there's no such thing as it always happened this way, but traditionally the markets got scared the first time or two, but it really didn't count until the third time. When they raised interest rates the third time, then the market said, I'm getting out of here. We get scared the first time, the second time, but it's not until now. Who knows? I have absolutely no idea how it's going to work this time, but that traditionally is a way that some people thought.
And the greatest bear market of your lifetime, do you mean in terms of duration, or actually what we might see in terms of retracement in stock markets?
Either way, Dave, you can define it any way you want to. It sounds pretty bad to me. If what I just heard, I would suspect it's certainly going to be the longest in my lifetime. And that probably means the decline will be the worst in my lifetime. Always in bear markets before, there are many stocks that go down 80 or 90%, which is pretty bad if you own them. And that hits a lot of people. There are always some stocks that only go down 50 or 60%. But I would suspect that the next time it's going to be really horrendous because there's so much, not so much, just so much debt in the world, but many companies have huge debt on their balance sheets. And in bear markets, people notice things like that and get scared.
Now, just changing the focus slightly, China has been an engine for growth for the last number of years, the last decade or two. We're starting to see some worrying developments coming out of China in terms of the property market there and the potential contagion for Chinese and international banks also as a result. Are you bullish on China still over the next 5 to 10 years, or are you? What's your view on the Chinese economy now?
Well, I mean, if we have the worst bear market in my lifetime, it doesn't matter where you are, you're going to be affected. Well, even North Korea will be affected in the worst bear market in my lifetime. So everybody's going to be affected, some less than others, and that's always been the case. I don't see how China can avoid it. It's the largest trading country in the world. And if its customers have problems, they're going to have problems. No matter who you are, you're going to have problems if your customers have problems. And in the worst bear market in my lifetime, nearly everybody's going to have problems.
So what's the best what way are you going to position yourself to protect yourself from this development going forward?
Well, I'm not selling short yet. I hope I'm smart enough to sell short somewhere along the line. Selling short is a way to protect yourself when things go wrong. The cheapest asset class I know, right? Bonds are in a bubble. Bonds have never been this expensive in world history. So bonds are a bubble. Property in many places is a bubble. You mentioned China, but Korea, New Zealand, lots of places, property is in a bubble. China is trying to cut back on its bubble, but unfortunately, they've been trying to cut back for a while. Never were successful before. Looks like they're now successful this time around. So property essentially is not something for me to buy anywhere in the world, unless there's a special situation. Stocks are beginning to form bubbles. I mean, Amazon goes up every day. Tencent goes up every day. Samsung goes up every day. Not all stocks are a bubble yet, though they're still. Look at the US, there are many stocks that are still down. So the only real live cheap sector that I know of is commodities. I mean, silver's down 60% from its all-time high. Gold is down. Gold is not going through the roof. Sugar's down 60% from its all-time high. These are not bubble kind of numbers, Dave. So the cheapest asset class I know are real assets. And if inflation is going to continue, which I presume it will, because they will continue to print, the only way to protect yourself historically is real assets, unless you find the few stocks that do well, even when the world comes to an end.
So you're suggesting that then as inflation continues, and if we do see a correction in bond markets, stock markets, that we're actually going to see a flow out of those, and a portion of that flow, or a large part of that flow, might flow actually into commodities as a protection for investors.
Well, often in history, in investment history, you had when stocks do well, commodities don't, and vice versa. When commodities do well, stocks don't. Not always. There's not always the correlation, but it is a frequent correlation that has happened in the past.
Now, you've said in relation to gold and silver, last time we spoke just over a year ago, you said you weren't buying any more gold and silver at that stage, but you definitely weren't selling any, and you were keeping what you had. Have you changed your position on that now, a year later?
Well, I don't remember when we spoke, but I certainly did buy more gold and silver there at one point. I've stopped and continue to stop. I'm still waiting for another entry. I'm not very good at market timing, so don't ask me when, but somewhere along the line, I'm sure I'm going to buy more gold and more silver. And if I were buying either today, I would buy silver. I mean, silver's cheaper on a historic basis. Silver's down 60% from its all-time high. Gold is down, what, 10%? But I'll buy more of both somewhere along the line, I hope. But if it were today, it would be more silver than gold.
And you said that you're not yet looking to sell short, not commodities. Now back to the stocks. What would cause you to take a short position in the stock market?
Well, the simple answer would be if the Federal Reserve raises interest rates 3 times, just because, it's what I remember. Now, that doesn't mean it's going to be correct or not. But if you're asking me here in January of 2022, that would be my answer. But who knows between now and then? Many, many, many things can and will happen. It could be something else that causes me. I mean, if America goes to war with Russia and China and Iran and North Korea, I probably won't be long.
And what's your expectation for the US dollar? Should we see a number of interest rate hikes, 3 or more interest rate hikes out of the Fed that could trigger have a significant impact on stock markets? How do you think that the US dollar is going to weather these developments over the next couple of years?
Well, whenever there's turmoil, historically, people look for a safe haven, and traditionally, many people think the US dollar is a safe haven. It's not. America's the largest debtor nation in world history now, but people think it is. So I still own US dollars. When the US dollar has its last big rally, my plan, who knows, is to sell it. And then I'll have to put my money somewhere else. I don't know where at the moment. And I don't even know if that's how it's going to work out. But, I don't see any way that the US can continue to build up gigantic debts and continue as the world's reserve currency. No currency has lasted more than 100, 150 years as the world's international currency. The US has been around a long time. There are many fundamental reasons that it's going to change and political reasons. The world's reserve currency is supposed to be neutral, that you can use, anybody can use it at any time, but it doesn't, Washington doesn't play that way anymore. If Washington gets angry at you, they put sanctions on you, then you cannot use the dollar. So a lot of people, not me, but a lot of people more important than me are saying, wait a minute, it's not supposed to be that way. So the Russians and the Chinese and the Brazilians and the Indians and the Iranians and many other people are looking now to find a competitor to the dollar, and they will. I don't know what yet, but they will.
Do you think that developments in China with the central bank digital coin there adds an extra element to the Chinese yuan trying to compete with the US dollar as a reserve currency?
Well, the renminbi is not convertible yet, and it's very hard for anything to be a competitor on the international stage if it's not convertible. Now, they have been making it more convertible since 2005, but it's still not there yet. But eventually, all money is going to be on the computer. Everybody's working on it. In China, you cannot take a taxi using money. You have to have your computer money. So they're ahead of the rest of us. It is definitely going to be computer money. Well, as I was saying, once the money's on the computer, I don't think the US is going to say, okay, this is money now, but if you want to use something else, you can. That's not the way bureaucrats in Washington think. That's not the way academics think. They want control and they want power. So I suspect all the money, I know all the money is going to be on the computer eventually. I don't think it's going to be rival currencies. It will be government money is what I mean.
Understood. Jim, it's been fantastic talking to you today. You're very generous with your time, and thanks for joining us on GoldCore TV again.
All right. Thank you, Dave.
Cheers.
Let's do it again sometime.
Indeed we will.
Thanks. Bye-bye.
Thanks for watching. And if you enjoyed this video, make sure you check out these videos. One with silver guru David Morgan talking about the outlook for silver for 2022. The other one is an in-depth interview with Steve St. Angelo talking about the energy cliff and the impact that it's going to have on future investment portfolios. And remember, if you want to see more interviews with industry experts and thought leaders in financial markets, subscribe to GoldCore TV and hit the notification bell now. And if you want to learn more about how to buy, sell, and store physical gold and silver, log on to goldcore.com, your precious metals experts.